So now we have transactions out of the way to a certain extent. So now what do we do with these transactions? Now we're going to look at income statements. And I've spelled this wrong, and it bothered me last night, and I didn't correct it, but now I'll correct it. So it's an income statement. This is owner's equity. It's going to be an owner's equity statement, a retained earnings statement, and a balance sheet. So that's what we do with all those balances we get. And the first, when you're at the end of the period, the very first statement that you need to do would be your income statement. So you're going to pull off, here we've got fees earned of $1,100,000. And we have, let me find that so I don't make a really major mistake on all of this. So, you have fees earned here of $1,100,000. And again, I'm going to turn all of these into decimal or to commas so that we can keep track of things rather easily. So this becomes my revenue. And let's just kind of make this a little neater so it's easier to keep track of. Like that. So that's my fees earned. My expenses become, as I go down through here, I've got rent. I have supplies. Well, that's an asset. It doesn't say expense. Say that. So I have supplies expense. I have utilities expense. And I have fat fingers, obviously. And I have a wages expense. And I also have a miscellaneous expense right here. I'm going to abbreviate that. And then I'm just going to take these so I can set them off and put them to the right like that. So my rent expense is $150,000. My supplies expense is $14,000. My utilities expense is $79,000. My wage expense is $490,000. And the miscellaneous expense is $7,000. So now to find net income, what do? I take all of these expenses and subtract them from my revenues. And that kind of looks like this. So I'm going to go equal that 1 million minus 150,000 minus 14,000 minus 79,000 minus 490,000 minus 7,000. It gives me a net income of $360,000. So that's how much I made this year. Now I need to balance this all. So to be able to balance it, I need to take my beginning owner's equity, which they tell me was $450,000. So again, let's turn all of this into commas. So this is $450,000. Withdrawals were $25,000. And that's going to have to be a negative because that's going to be subtracted from that. So I'm going to put a negative in front of it just to make sure everybody understands that. And I'm going to add net income, which is $360,000. Which is going to give me my ending. So how do I get my ending? So it's going to be equal $450,000. I would be subtracting the $25,000 and then adding the $360,000, which gives me an ending inventory of ending capital account of $785,000. The next thing we then do would be putting together the balance sheet, which kind of looks like this. I've kind of laid it out for you. So now, the first thing I'm going to do is this owner's equity. I'm going to put that in there right now, so I don't forget it, because that's the figure that's going to balance this whole thing out. We're going to take this again and do it into a comma format. So what are my assets that I'm dealing with here? I've got cash. I have accounts receivable. I have land. What else do we have? And we have supplies right here. And again, I'm going to put those to the right so that I know that those are what I'm going to add. So I have cash of $210,000. I have accounts receivable of $370,000. I have land of $300,000. And I have supplies of $20,000. And that will give me total assets of, let's see what that adds up to be. $900,000. So that means my liabilities and owner's equity need to add up to $900,000. So my liability account is account payable. Again, I'm going to put that to the right. As you can see, it hopped right over there. And my accounts payable are $115,000. I already have my owner's equity here. And if I add those two together, I hopefully come up with $900,000. I think I do, just by looking at it. So that's how you take all of these accounts after the transactions and turn them into a new balance sheet, taking the income into account. So you have revenues, you have the income statement first, then you have to reconcile the owner's equity, and then you can create your balance sheet. Now, the next one, I'm going to give you this whole scenario all over again, and you're going to do a little bit of calculating for yourself. So here we go.